Hi, Ryan, welcome to Value. So today we're going to look at Lockheed Martin because it's one of the very few stocks on the market that's actually being very stable in this current market. Like, we're seeing so many tech companies just decline in a massive way. So when you see a company like Lockheed Martin and we look at the share price and we go, actually, it's actually stayed so stable in the past few weeks, even months. It's actually increased over the last few months, which is kind of more surprising than anything, because you've watched this market decline and decline, but Lockheed Martin's, they're doing actually very well. Share price is at $449 and it's giving it about a valuation of $120 billion. Now, this company specializes in producing weapons. Well, not only just that, but I think our association with the company is that it produces weapons. And the fact that the US is basically constantly shipping weapons to the Ukraine means basically Lockheed Martin can't make them quick enough to actually refill the stockpile. Um, so, as it's put here in this headline, Biden visits Lockheed Martin plant as weapons stockpile strained. Like basically they're giving so much of certain weapons, like the Javelin, as you can see in this picture here, a very portable type weapon, which is very effective for Ukraine to fight Russia. So hence why there's a massive demand for those. And basically they've got a pitch with Congress to approve a $33 billion aid you can imagine $33 billion, and that's going to go to the very few weapon manufacturers, like Lockheed Martin, and they're going to benefit out of it. So you can't actually see the stock declining much, because they've got so much support from the government and a lot of demand for what they produce. So in this headline you can read, Lockheed Martin looks to nearly double Javelin missile production. Now currently they can produce around 2,100 a year, and they want to increase it up to 4,000 a year. So you can see that they're actually wanting to produce more, which is a great sign. Though, in a general sense, it's going to add some parts. It's going to increase the revenue, but it's not going to be the biggest increase, of course. Like the Javelin costs $178,000, and it's based on the Pentagon's 2021 budget. Each missile costs $78,000. So you add in, if we did the math on just missiles, at $78,000, and then we times that by about 1,900. Let me quickly do the math on that. So that's $148 million extra that they might get in revenue if they sell all those missiles. So, like in the scheme of things, we're going to have to look at the revenue. Obviously, their revenues are very large anyway. So we look at the net sales. So as you can see, they split into four categories: aeronautics, missile and fire control, rotary and mission systems, space, and it amounts to close to basically about $15 billion for the recent quarter that ended in March 27th. So adding an extra 100 something million in that area probably isn't going to add as much, but they're likely going to be adding more in other parts too. So then it's not as a general concern in that sense, because we look at these numbers and they have been declining from the prior year, by 11% for missiles and fire control, negative 14% in rotary and mission systems, and in space they've also declined on that. But basically this Russia and Ukraine kind of conflict has turned things around for them, and then they basically have guidance which was quite healthy. I just have to find that for you. I think it's somewhere up here. Where are we? Yes, there we go. So we have current 2022 outlook is at $66 billion in revenue. So as we saw before, it was about 15 billion for that quarter, for that recent quarter. Now 4 times that's about 60 billion. They expect about 66 billion. So overall, a very healthy kind of outlook for the revenue. And are basically looking at free cash flow of over $6 billion, which they can use towards a lot of other things, namely dividends and buying back shares, which is what they are looking at doing basically right now. So basically, cash. They returned 2.8 billion in cash to shareholders through share repurchases and dividends. So we can kind of look at that and go, yeah, like they've got cash to return back. And for a company that's worth 120 billion, it's not a massive return, but it's a steady return. So if you're looking for a steady company, then this is kind of what it looks like. It's a company that probably doesn't grow that much, but its revenues are very, very steady, and it is producing some really, really good margins and making some really decent profits. So basically, if we come back down here and go, cash from operations will be close to $8 billion. So that's very, very healthy, and that gives them a lot of room to do other things with. And it's likely, that they're going to be able to continue this momentum onwards. As long as this Ukraine and Russia conflict kind of keeps going, the confidence for Lockheed Martin to continue to do well is probably still there. So yeah, like you can see that, like it's just going to be very stable. That's if you wanted to park your money into something that was stable while the market's dropping and you don't know where to put your cash. That's probably one area that's kind of healthy in that sense. But I mean, a lot of people probably don't feel that comfortable investing in these type of companies, which, that is very fine itself. But I think this serves as a really good example where we're watching these companies, like a lot of tech companies, just decline massively over the last 12 months or even the last few months in general. So all of a sudden to see a company that's actually stable, it's kind of a refresher that, hey, these opportunities are out there. You just have to keep looking and looking and looking. Don't stick to just one focus. Don't just go, I'm just going to focus on one area of like tech. You could look at oil, you could look at gas, you can look at like retail, though, there's a lot of different areas, hence why you just want to diversify and you kind of broaden your horizons around what, might be investable for you and how you balance your portfolio. Hence why, the whole, diversification is, the best way to kind of reduce your risk. And it's basically, as they say, that's only free lunch on Wall Street, because basically if you diversify, you protect your downside. Whereas if you're all in one area at the same time, then that's where the risk is kind of. But yeah, like you can see, Lockheed Martin has been rising since November last year. And it's, it looks like it's gonna stay steady, like given the projections and all that. I'd say it looks very healthy. It looks like Biden wants to kind of get more weapons produced, especially with his recent tours around the kind of manufacturing facilities. It's a sign that there's confidence in the government for to kind of like boost that area up and make sure they're able to keep producing more and more. And that can only be a good sign for the company in itself. So that's when you're analyzing companies and you're trying to tell which one's going to perform well or not perform well. You just have to look at the demand and supply from each side. And basically, we see Lockheed Martin wanting to increase the production of Javelin missiles, and you can see the government also wanting to increase their demand and stockpile of certain weaponry, and that can only be a good thing. And the fact that they reaffirmed their 2022 outlook means they're very confident about getting around $66 billion in revenue. So overall, that's very reassuring, and probably, something that probably makes you happy to park your money there if you're looking for somewhere stable. But yeah, I think overall that's what I wanted to talk about in terms of this company. I just think it just serves a really good example of a company that is just, holding itself very well, especially in the current market anyway. Let me know if you've got any questions or certain stocks that you want me to talk about. Then I'll look at them. Until then, good luck investing, everyone.